Welcome to Talking Business, a podcast produced in Melbourne, Australia. The podcast is available on the Acast site, my own website, the Apple Podcast Store, or wherever you go to get your podcasts. Or you can get it at the Business Acumen website at www.businessacumen.biz. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from my website, leongettler.com. I am Leon Gettler. My job is to review and monitor the week's news in business, finance and economics. I bring it all to you every week. This is episode number 13 in our series for 2025, and today's date is Friday, May the 9th. First, I'll be talking to Dr Arne Geschke, the co-founder and CTO of the Australian tech startup Fair Supply. Dr Geschke will talk about how his firm's supply chain tariff calculator can help Australian businesses navigate ongoing trade tensions and supply chain chaos by calculating the full impact of tariffs across multi-tiered and highly intertwined supply chains throughout all tariff points. By using the calculator, businesses can estimate how the tariff will affect them and enable comparisons between other countries to identify the most cost-effective sourcing options. And I'll be talking to independent economist Craig James about what's happening in the market next week. But first, let's talk to Arne Geschke.
There's a whole lot of calculations you've done on the direct and indirect costs of new and reciprocal tariffs and what they're going to cost the Australian economy. And you're saying they're going to cost the Australian economy more than 15 billion. Is that right?
That's correct. Yeah.
So what are the worst affected sectors?
So the worst affected sectors for Australia are descending order. So the worst affected sectors in Australia are actually health. Health is the worst affected sector, closely followed by construction services and then public administration and defence services. So those three sectors, they bear the brunt, although they're obviously not directly targeted by any tariff measures. It's just through indirect effects, essentially.
There's a whole lot of supply chain vulnerabilities there.
Yeah, that's exactly the reason. Yeah. So Australia is at the moment not part of those companies that are affected directly by tariffs at a grand scale, obviously, and especially imports into Australia have not been tariffed specifically in response to what's been going on. But still, there's a experience increase in costs in the sectors in Australia. That's essentially because the supply chains for these sectors span around the world. That, for example, health and social services in Australia, they don't operate in a vacuum just within Australia. They rely on machinery. They rely on products that are required, for example, to run hospitals, medical devices that are very complex and often imported. And those products in themselves, they require inputs that are essentially embedded into global supply chain frameworks. And some of these supply chains, they're cross borders that are now heavily impacted by tariffs, and those tariff costs are passed down.
So you've developed a proprietary engine mapping over 60 billion global supply chain nodes. Is that right?
That's correct. Yeah.
How does that work?
Yes, it's actually a fairly well understood academic discipline to understand supply chain impact and economic structure. The big differentiator between the conventional application of these techniques and what we do at Fair Supply is that we do it at a global scale. And the data sets that feed into the supply chain framework come from the statistical agencies around the world. For example, the Australian Bureau of Statistics, they publish data sets that are fit for purpose for this kind of work. But what usually hasn't been done is that these individual country-specific data sets that can be used for supply chain analysis were glued together to build a global supply chain framework. And in a globalized world where you have international and global supply chains, you need a data set that understands the supply chains within countries and also the trade linkages between countries. And in order to pull that off, you need a whole heap of data sets that all need to be merged together into a single framework. And that's one of the key components here at Fair Supply that we use to run our assessments.
Right, and it's real-time modeling?
It's real-time modeling to the point that the Australian Bureau of Statistics and other agencies can be real-time modeling. So usually these data sets are published with about a year and a half delay, and they show the supply chain behavior within one fiscal year. And so there's ways to have an update mechanism that considers effects that are happening right now. But the big backbone is essentially the data work that's done by the statistical agency. So real-time, as in like how did the supply chains change from yesterday to today, cannot only be done by using these big data sets that sit behind, but that's essentially as deep as it goes.
But I mean, you've got issues where you've got announcements coming all the time.
Yeah. So linking the tariff data sets to this, that's real time. Yeah. So the supply chains that sit underneath, they're probably a tad more static, and that's simply because there's no mechanism in the world to assess global economies on a daily level. That's something that the big agencies do on an annual cycle. So once we understand what the structure of these supply chains look like, then we can attach effects or shock effects to these different supply chain nodes. We can do that in real time. That's what we did with the tariff calculator. So we said, with the way the world economy currently works, and now suddenly a shock is introduced, which is a supply chain tariff shock. How does that cost effect trickle through the supply chains in this very instance? And that's something that is the first step in a tariff scenario, is that tariff is introduced and the existing supply chains are now subject to tariff shocks and price increases. And then as these price increases are felt, over time, supply chains start to change. Companies start to find different suppliers, and they might choose maybe suppliers from different countries where the tariffs are not as high, and so on and so forth. But this initial shock is what is felt literally overnight by companies, and that's what we are able to model in real time.
So, but what business would be looking for would be country comparisons, side-by-side country comparisons. Do you provide that?
Yeah. So we have a bunch of applications that we provide. So our calculator offers, first of all, I think the first starting point for people that engage with our tariff calculator is always, this is my current procurement spend in order to run my company. How is that going to change? So, for example, especially products that are very hard to source somewhere else. For example, planes from the United States are heavily dependent on imports into the United States, aluminium imports, technology imports, and they are, of course, all subject to tariffs now. So the price for planes is going to increase. Now, there's very little competitors to North American plane manufacturers that could be chosen as alternatives. So it's a very interesting topic. First of all, how much price increase do I have to be prepared for? And then the second step is usually, what are my alternatives? So often we find that a large procurement spend, so on vehicles, for example, if those vehicles are subject to tariff impacts, then the users of our tariff calculator look for alternative countries where really good cars are produced, and maybe I should change suppliers then.
Well, the issue, though, particularly with cars, is that the supply chains are so complex, and you've got so many different countries involved in it.
Yes, and that's where our supply chain engine comes into play. So these complexities of these supply chains, where you often have, for example, if you have a complex product like a car, there's often tens of thousands of components that you need just to manufacture the car. And then often each of these, tens of thousands of suppliers for a car company, they in themselves might have, say on average, 1,000 suppliers themselves. So by the time you get to tier 2 of your supply chain, you're dealing with often like hundreds of thousands, if not like millions or tens of millions of supply chains. So if you spin that thinking process further, very, very quickly it becomes very complex. And so you need a very succinct mathematical modeling approach in order to be able to, first of all, harness the information that you need to model these data sets, and also to have succinct ways of actually assessing those supply chains. And so the approach that we're taking follows exactly this approach by using a macro approach of looking at the interdependencies of different sectors in the global economy. How much does the car manufacturing sector in Japan rely on steel imported from China? How much does the steel sector in China rely on iron ore imports from Australia? And these individual connections are quite easy to track. Chaining them together to supply chain frameworks is something that needs sophisticated mathematical modeling techniques. And that's the power of the systems. We are not actually limited by the complexity of the supply chain.
Right, but there are various sectors that are very dependent on these complex supply chains, like public administration and defence, for example, vehicle manufacturing, as you mentioned. I'd say manufacturing of pharmaceutical and related products would be very. What about computers? That would be very complex, wouldn't it?
Yep. So it's also up there in the top ones. Not so much in Australia because we don't have that much electronic manufacturing, but it's actually in the top 10 still for Australia. It's the same for most sophisticated, really complex products, whether it is single products that need a lot of inputs or often rely on very complex global supply chains. That is, of course, pharmaceuticals, it's motor vehicles, but it's also actually construction. If you think about how many components go into building, say, a high-rise somewhere in the city, there's lots of components that go into that, often sourced from around the world. It's the same for electronic equipment. It's the same for sectors like defense, where there's a wide spread of procurement that goes on to make to support that sector. And of course, large sectors like public administration. Public administration needs to procure everything from desks for the offices all the way to vehicles themselves. Lots of services that need to be procured to be able to actually provide public administration. So those kinds of industries are often very heavily affected. Other industries, like more primary industries like agricultural and mining, they are a bit more protected from that because they actually need less inputs to provide their services.
But that would mean that a lot of these sectors would actually fall short of different parts from time to time.
Well, and the secondary effect, yes. So this first effect that we were able to assess here is simply the price shock, under the assumption that in the first few weeks or months, the supply chains don't change because there might be long-standing contracts with suppliers, but the price effects are felt due to the tariffs. So there is then a bunch of directions that this can go into. And this can, of course, be shortages, where there's a serious supply chain disruptions, where more money can't fix the problem, where there's a supply shortage. And this can also be that the price is driven up to a point where the economic viability is not given anymore. But yeah, things do get affected.
Yeah, we saw all that during COVID, where there was a lot
Yes.
of supply chain issues there.
Yep, that was a slightly different scenario. So what we have in COVID is what's often summarized in this field that we're working in, and not as a shock in the supply chain, but actually as a more what's summarized under the term disaster modeling. And that's not where a sector is able to produce something but at a higher price. The effect was more that the sector is unable to produce something due to production shutdowns. And that, of course, also has effects on price, but there's physically less stock in the supply chains, which has like a whole heap of effects. And COVID was, in a way, a good dry run for understanding supply chain vulnerability and also supply chain fragility. And as we sort of move forward in this journey of putting tariffs in place, but also where we have a world where we are more prone to, say, natural disasters, is that we will feel more of these disaster effects where, say, severe tropical storms take out production facilities for a certain amount of time, or flooding take out production facilities. But the effect is slightly different in the sense that the ability to produce a good is affected rather than the price.
So this could potentially last beyond just tariffs.
I think going forward, supply chain resilience, supply chain intelligence, the understanding of supply chain fragility, including things like critical infrastructure supply chains, is going to be absolutely integral for companies. So tariffs is probably the first time that it has really come to the surface and has really gotten the attention in a short time span that companies realize they have to look at their suppliers and how supply chains are affected. But this is not going to go away.
Indeed. So we can expect more of this to come regardless of what happens with the tariffs.
Yes. And the need will be there to understand this more and more and to safeguard supply chains and business resilience, essentially to ensure profitability no matter what.
Indeed.
And there will be trade-offs. There will be things where you can say, I can assure supply, but other things I cannot assure, and I have to make a call.
Right, okay. Well, Arne, thank you so much for your time. It's been fascinating.
Thank you.
And now let's talk to independent economist Craig James.
Well, Craig, what's the outlook for the week next week?
Well, there's basically two events which we're going to monitor. And certainly, sort of Monday will be the reaction to the election outcome, sort of here in Australia. So the expectations from the market is that the government will be returned. Perhaps you could see a hung parliament, and that would create some worries for markets, particularly for foreign exchange markets. They don't like uncertainty, and the share market as well. I mean, yes, but investors generally do not like uncertainty. So that's one thing to watch out for in terms of Monday. And then later in the week, we've got the US Federal Reserve get up bright and early, Thursday morning, around about 4 o'clock, 4:30, and that outcome should be coming through. But certainly, even in terms of the United States, we're not expecting the Federal Reserve to cut rates. That will probably be later on. Remembering, they've already cut rates 3 times, one by 50 basis points and 2 lots of 25. The Australian Reserve Bank has only cut rates once, but of course we didn't go as high as them in terms of interest rates. So therefore, so we don't need to be as quick or as aggressive in terms of cutting rates. But for ourselves, the door is open for a rate cut at the next meeting, and basically, in the order of 25 basis points. I think we could get another 2 to 3 rate cuts sort of this year, I think. But those are the two things which really stand out for me, at least looking sort of the coming week.
Our latest inflation figures was that the trim mean came out at 2.9%, which is, that's the lowest it's been since 2021.
Yes, and it's certainly sort of moving in the right direction. The weighted median, which is another measure, is 3%. But also economists like to look at 2 quarters and multiply those by 2 to get an indicator. So effectively we're running at 0.7 sort of quarter. That basically suggests that sort of underlying inflation is somewhere around about the late twos, sort of say 2.8 to 2.9. But the Reserve Bank said they want to have certainty that the inflation here in Australia is going to stay in that 2 to 3% target band. Of course, they target the midpoint of the band, 2.5%.
Yeah, and at the same time, the Fed's in no hurry to cut rates, and the Fed's also watching out what happens economically with Trump's tariffs.
Yes, well, there's the politics and there's the economics. Sort of in the situation as the on again, off again tariff increases. That's certainly something to watch out for. And the interesting theory sort of out there is that there's a lot of exports from China that was destined for the United States. They're now going to be finding their place in other parts of the world. Now, Chinese products are notoriously sort of are cheaper than the products that sort of in advanced nations like Europe and in Australia, and that may actually be a factor in driving inflation even lower. And if that is a deflationary pulse, that may be something that the Reserve Bank sort of will have to look through, and then the US Federal Reserve will have to look at sort of fairly carefully as well to see what the implications are in terms of that. But for this week anyway, we expect the US Federal Reserve to stay where they are in terms of rates, and that we could get sort of a couple of more rate cuts later in the year. They usually alternate each meeting with the so-called dot plots, the forecasts of the participants of the Federal Reserve Board or the Federal Open Market Committee. And so we won't get any fresh forecasts this time around, but we will get, as is always the case, Jerome Powell. He'll be sort of conducting the press conference, and we'll get some further insights. Notably, so I think probably the first question to him is that the president doesn't seem to like the job that he's doing. So how does he react to that? So I expect that question to be well up in terms of the pecking order.
Even though Trump has subsequently come out and said he has no intention of sacking Powell, which is...
Yeah, well, that's right. Yes, and again, markets don't like uncertainty. And when the president gives that indication, that's music to the ears of investors. And we have seen nice little recovery rallies in share markets over the last couple of weeks, and hopefully that remains the case. In terms of economic data, I suppose we run through the board over the week. We've got ANZ job ads out on Monday. The reaction to the federal the election yesterday as well, that on Monday, and Tuesday building approvals, and the TD inflation gauge, a measure of inflationary pulse, and we get monthly housing spending coming out on Tuesday as well. That's going to be the main measure of consumer spending, or monitored by the Bureau of Statistics. When I think it's June of this year, retail sales goes by the wayside, or retail trade, and it's replaced by the monthly housing spending. So that's something to focus on Tuesday. Cost of living data on Wednesday, and business counts coming out Thursday. How many businesses have been created over time? Data is up to March quarter of this year. And then we get the monthly business turnover indicator on Friday.
Now, earlier you said that there was a chance that we could have a hung parliament. Some of the polls are showing Labor will definitely win. How do you expect the market would react to that?
Well, when you've got status quo, when you've got the incumbent winning, it's business as usual. And that I don't think there's a degree of too much uncertainty. Too many people expecting different sort of results. The money is generally on Labor being returned, and at worst hung parliament. It'll be interesting to see how some of these new minor parties perform, and see whether the independence, the rise of the independence continues, and that just makes it harder to be able to form form a government, and that's something that we have to watch. So if it is a hung parliament and you've got a lot of people to talk to, negotiate with, that's something that the markets would not like at all.
Right, okay, because the reality is that the Australian electorate's very fragmented at the moment.
Yeah, it's certainly the case. There's one seat called North Sydney that has been abolished, and Bennelong is assuming that widening, sort of as a result of that, and it's picking up what was sort of significantly sort of coalition-leaning voters. So it's become sort of one of the most marginal in the state, if not sort of Australia. So certainly, yes, that's one where the spotlight, sort of will put on. I suppose we should go through the US calendar. The services activity measure on Monday. We've got the trade figures out on Tuesday. January trade deficit was a record high, came down in February. Donald Trump at least would like to see that the deficit improving when that figure comes out on Tuesday. We've got a weekly retail sales and a measure of economic optimism also on Tuesday. Wednesday, mortgage approvals. That's, again, a weekly measure. And then, as I say, so meeting over Tuesday and Wednesday is the Federal Reserve, and the Federal Reserve will hand down that decision early on Thursday morning, our time. Also in the US on Thursday is productivity and weekly jobless claims. And that basically is it for the week. So not too much in terms of market-moving economic data in the United States. And seemingly you'd say the same for Australia. The focus will be on the election here in Australia, and focus on interest rates, very much the case in the United States.
And lots of speculation about the direction of interest rates here as well.
Yeah, there's certainly with inflation, now down target band. The next meeting of the Reserve Bank is the 19th and 20th. So certainly, in a few weeks' time, we'll get the Reserve Bank sort of meeting, and the door's got to be open to another interest rate cut. The economy is chugging along at the moment. Inflation is coming down, and there's not too many concerns in terms of the Australian settings. We just need to see that continue, and I suppose we're just going to continue to watch the gyrations, if you like, or sort of the uncertainty sort of that's associated with the current US president.
Indeed. Well, Craig, as always, it's great talking to you. Thank you very much for your time.
My pleasure. Thank you.
Thank you.
So what's happening in the news? Well, Warren Buffett has announced he will retire as chief executive of Berkshire Hathaway at the end of the year. The veteran investor, known as the Oracle of Omaha, told his company's annual meeting he would hand over the reins to vice chairman Greg Abel. I think the time has arrived where Greg should become the chief executive of the company at year end, said Buffett, 94. Mr. Buffett, who built Berkshire Hathaway from a failing textile maker into an investment juggernaut worth $1.16 trillion US, is arguably the world's most successful investor. After standing applause from the audience of around 40,000, he joked, the enthusiasm shown by that response could be interpreted in two ways. The billionaire told Saturday's company meeting in Omaha, Nebraska, that the only people who had known about his decision were his two children, Howard and Susie Buffett. Mr. Abel, sitting next to Buffett on stage, was apparently caught unaware by the announcement. Mr. Buffett handpicked Mr. Abel as his successor 4 years ago, but gave no indication at the time that he would retire. While Abel will be CEO, Buffett will be chair. Berkshire Hathaway owns more than 60 companies, including insurer GEICO, battery maker Duracell, and restaurant chain Dairy Queen. It also has major stakes in Apple, Coca-Cola, Bank of America, and American Express, among others. Mr. Buffett, who has given away billions into charity, was last month ranked by Bloomberg as the world's fourth wealthiest person with a net worth of $154 billion. He earned his first money as a 6-year-old, bought his first shares at 11, and filed his first tax return at 13. Despite being one of the richest people in the world, Mr. Buffett has lived in the same modest house in Omaha for more than 65 years. The announcement came as Mr. Buffett spoke out against President Donald Trump's tariffs, telling investors that the US should not use trade as a weapon. It's a big mistake in my view when you have 7.5 billion people who don't like you very well and you have 300 million who are crowing about how they have done, he said early in the meeting. Trade should not be a weapon. And Westpac, the first of the big four banks to report interim earnings, posted a 1% dip in its first half profit of $3.3 billion. And Australia, which just held its latest federal election on May the 3rd, boasts some of the world's most sophisticated political institutions and a wealthy economy. Known as a lucky country, it also shows strong measures of GDP per capita and state capacity. But according to a new report from UCLA Luskin School of Public Affairs and the Berggruen Institute, Australia has long struggled to move its economy past reliance on commodity exports, notably to China. The report reveals hidden erosion, according to its authors, who cite democratic accountability scores which have slipped since 2010, while the provision of public goods trails peer nations and trust in politicians has cratered. Labor's rebound in the polls, they write, conceals a broader voter realignment as younger Australians and disaffected centrists drift towards smaller parties in record numbers. The authors say that economic pressures are central to the malaise as a country's prosperity still hinges on iron ore, coal and liquefied natural gas, exposing the limits of a resource-heavy model. Meanwhile, a housing affordability crunch, rents are at their worst level on record, has opened a stark generational divide and accelerated inequality, with younger voters priced out of home ownership. They also note that social cohesion is also fraying, with political polarisation echoing trends in the US. And in the wake of Labor's overwhelming win in the election, Australia's business chiefs are calling on Labor to prioritise a productivity agenda that unlocks long-term economic growth and use its strong mandate to make tough decisions on workplace reform, overhaul the tax system and remove regulatory barriers. Energy giants said heavy electoral losses for the Greens in the House of Representatives should prompt Prime Minister Anthony Albanese to support the development of more gas reserves to help solve the energy crisis. Rio Tinto wants Labor to remove uncertainties around environmental approvals for new mining projects. Chief executives and chairs of the country's biggest miners, banks, retailers, tech giants and superannuation funds were unanimous in their call for Labor to avoid squandering its clear mandate and embark on meaningful reform. Dig Howard, the chief executive hearing implant giant Cochlear, said Labor needed to work with business to improve productivity and the tax and industrialisation system. Our tax system is inefficient due to the heavy reliance on income tax and corporate tax, and our industrialisation system has become even more complex. Both of these discourage companies from making productivity-enhancing investments. National Australia Bank Chief Executive Andrew Irvine said Labor must focus on productivity, housing and energy, while also helping with cost of living challenges. And Gina Rinehart believes the Liberal Party was chased away from supporting Trump-style politics by a left-wing media campaign and has described the election rout as devastating and emotionally exhausting. Australia's richest person released a lengthy statement on Monday that traversed Argentinian politics, Australian industrial relations and a choice to wear Trump-branded attire while walking the rubbish-strewn streets of New York. Rinehart lamented the Liberals' apprehension of embracing politics akin to US President Donald Trump's and warned the re-elected Labor government not to let Saturday's stunning election victory breed arrogance within the caucus. The mining billionaire wished Prime Minister Anthony Albanese well, but urged him not to implement policies that hampered business investment in Australia. How attractive a Paris Accord, unreliable electricity, nature-positive plan, big delaying expensive government tape, big high-cost government, old IR policies that proved unsuccessful for productivity, but successful for strike disruption and unreliability to attracting investment to underpin our living standard. Last month, Rinehart called for the federal government to increase defence spending to 5% of GDP and invest in an Israeli-style missile defence shield to protect the continent. And top Liberal Party donors are pulling their financial support for the party, blaming the combination of a disorganised election campaign and Peter Dutton's Labor-like policy platform, saying without early wholesale changes, they won't be giving in 3 years' time. Billionaire Robert Milner, chairman of investment house Washington H. Sol Pattinson, said he would not be donating again until there was major change. Sol Pats has in the past donated more than $1 million to the Federal Liberal Party. Stockbroker Angus Gakin, one of the largest Liberal donors, said leaders simply lack courage for bolder policies that would have had more impact. Mr Aiken donated $250,000 to the Federal Liberal Party this year and has donated hundreds of thousands over previous years. I have zero interest in donating further to the Liberals. They need a wholesale clear-out and to work out what they want to stand for instead of these Me Too-style quasi-Labor policies, he said. Jason Titman, the chief executive of cryptocurrency Swiftix, which donated tens of thousands of dollars to both parties, pushing for better regulations and resistance to Labor's unrealised capital gains tax, said the coalition had tried to please everyone and ended up pleasing no one. A lot of their policies were similar to what was being offered by Labor. I believe an important area for them to campaign over the next 3 years is to make voters aware that Labor's proposal for taxing unrealised capital gains is counterproductive to growing the Australian economy and it will have a negative impact on productivity growth, the health of investment in Australia and the wealth of Australians, Mr Titman said. And YouTube was the biggest single channel for election spending during the 2025 campaign, netting close to $26 million in advertising from the political parties. This is according to Google's own Advertising Transparency Centre, which showed a total of $25.9 million spent on video advertising on YouTube during the campaign period. By comparison, Agile, a Brisbane firm that measures a TV advertising spend, found that roughly $54 million in total was spread across 7, 9, Paramount, SBS and Foxtel during the same period. YouTube's windfall was fueled by Labor Party splurge. Labor spent the most of any party on the Google-owned video platform, over $9 million, which was 3 times the amount it spent in the 2022 election. Agile's analysis found that across YouTube plus the TV networks, Palmer's trumpeted patriots spent the most, with approximately $24.1 million in video spend. Labor came second with $24 million spent. The coalition spent $21 million in video advertising, with the Greens spending a more modest $4 million. Interestingly, Agile found that independent parties combined outspent Labor and the coalition on YouTube advertising, while the two majors trumped the independents in regard to traditional TV spending, making up over $35 million of the $54 million spent on TV advertising between the parties. And Australian entrepreneurs and investors looking to strike it rich in the defence sector say Europe's push to rearm itself and reduce dependence on the United States military is shaping up as a potential gold mine. A growing band of Australia's defence tech startups need to find export opportunities to survive and are vying for a slice of the €800 billion, that's 1.4 trillion Aussie dollars, the European Union intends to commit as part of its announced Rearm Europe Plan 2030. Europe is seeking to deter potential attacks from Russia and other adversaries, as US President Donald Trump has warned the continent it needs to defend itself and that was too reliant on American military support. Among the Australian companies looking to cash in on this opportunity is Canberra-based Penton, which completed a merger with Britain's Amiosec on Thursday. The newly formed company, named Penton Amio, expects to generate more than $125 million in revenue this year by selling secure communications and electronic warfare technology to defence and government customers across Australia and Britain. Matthew Wilson, Penton Amio's executive co-chairman, said the company has held promising talks with the Canadian government and European nations. Penton Amio core products are the Alto Crypt Stick and Alto Crypt phone that allow military and government customers to access classified information via a USB stick or smartphone. It is also developing technology that uses artificial intelligence to create decoy electronic signals to confuse adversaries. Sydney-based Advanced Navigation is another local defence tech startup experiencing strong growth in European exports. Chief Executive Chris Shaw said demand for its products, which provide precise navigation without GPS connectivity, grew markedly in the past year. The opportunity is clear. Europe needs capability and Australia can supply it, said Shaw. And Climate and Energy Minister Chris Bowen is in the box seat to become the next United Nations climate chief, industry figures say. As government officials become increasingly confident Australia will secure the rights to host a major global climate summit in Adelaide in 2026, departmental officials have been making preparations since at least January for Australia to host the 31st United Nations Conference of the Parties Climate Summit in anticipation that the government's bid will be successful. The one other bidder, Turkey, is yet to withdraw its bid. The leader of the host country must appoint a senior government figure to the role of COP president, a near full-time job that requires more than 12 months of high-level diplomatic negotiations in advance of and during the summit to secure binding agreements between close to 200 parties. Bowen is thought to be open to the prospect of becoming president and is widely viewed among energy experts as the most qualified candidate. The position does not technically require him to relinquish his role as energy minister and is expected to retain his portfolio in an impending cabinet reshuffle, according to senior government and industry sources not authorised to speak publicly. And sales of Tesla vehicles in Australia slumped 76% in April compared with a year ago, continuing to lose market share to the BYD brand from China, which outsold it by more than 6 times. Traditional diesel and petrol-powered utes were the 2 biggest selling vehicles in Australia in April. The Toyota Hilux returned to the number 1 position for the first time since September 2023, figures from the Federal Chamber of Automotive Industry showed on Monday. Tesla sales in Australia reached 500 in April, compared with 2,077 in the same month last year, figures released on Monday from the Electric Vehicle Council outlined. On a year-to-date basis, Tesla sales are down 62% in Australia for the first 4 months of this year, at 5,660 compared with 14,866. The Tesla brand is suffering a backlash globally, in part because its head honcho, Elon Musk, is closely associated with Donald Trump, heading up the US president's aggressive drive to cut government spending. Sales in Australia have also been crimped by a changeover to a new Tesla Model Y vehicle. And that's it for this week. And next week I'll be talking to the global CEO of Smart Recruiters, Rebecca Carr, who has all the insights about workplace trends and the modern workplace. And I'll be talking to RMIT economist Sinclair Davidson about the post-election challenges for the Albanese government with regard to improving Australia's productivity and the need for serious tax reform. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from our website, leongettler.com. If you like Talking Business, please leave us a review with Apple Podcasts. Thank you in advance. In the meantime, you can find me on Facebook, Twitter, or X as it's now known, Instagram, LinkedIn, and YouTube. If you want to contact me, email me at leon@leongettler.com. I answer all emails. Also in my spare time, I have a copywriting business. If anyone needs newsletters, blogs, articles, or editorial, email me. Looking forward to the next episode of Talking Business.